Hello, I'm Michael Glass, and this is our weekend wrap up for May 14th, 2011. Before we begin our video, we want to start off with our disclosures. Any symbols you see today should not be inferred as trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies that we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So, again, we're going to do our stock market wrap-up for Saturday, March 14th. We're going to look at the economic calendar. We're going to look at what happened over the past week, identify key support and resistance, price levels, look at the gold and crude charts just to see if they give us any leading inclination, and then we have an education spotlight at the end. With that being said, let's begin. When we look at the week that was, we can see that the market was basically consolidating for the week. The market was range-bound. The Dow Jones fell, the Nasdaq rose, the S&P fell. So the market was in a range for the week. 5 of the 10 sectors rose. But what's interesting is that the financial sector was down a little over 2% for the week. But that makes them down for the year. And even though all three major indices are up for the year, if financial sectors are down, and the financial sectors are a major part, 23%, I believe, of the S&P 500, if they're down, they may pull the market down with them. We also saw the dollar rally this week. That could be for QE2 ending in June, and so therefore, the liquidating of the dollar coming to an end. Overseas, we saw renewed debt concerns over Greece, which is weakening the euro. Microsoft bought Skype this week, says they're going to integrate it with Xbox Connect in their Windows 8. Should be interesting. And no real economic news that moved the market. The key is that moved the market. Retail sales and inflation data mainly met expectations. So, as far as coming up for this week, we've got some earnings, nothing really that big. And maybe the FOMC minutes will be the largest thing as far as economic releases. Maybe they'll say something in the minutes about QE2 ending in June. Let's pull up the charts and take a look. Okay, so we are looking at the S&P 500 on a daily chart to start off. And you can see some of our key price levels. We have our ultimate support down here at 1300. We have our swing high support at 1344, which we broke this week. And then we have our resistance up here around 1370. Now, we also have our intermediate uptrend line from March 17th. And if we take the time here, let me grab my trend line, we can also see we also have a downtrend line now from May 2nd. So we kind of have a wedge triangle pattern, which we need to resolve one way or other. We're either going to break to the top side or we're going to break down to the bottom. We also can see the 50 moving average is sitting here as support, so that's something to watch. And this is sort of matching up with this little swing high here. It's kind of where we have closed. You can see it this way. So that line comes right on over to where we closed today. So that basically says that the market has pulled back. The market is consolidating. You can see this tight channel that we're in. And so we certainly want to have some alerts to catch the push out of this one way or the other. You see, we don't have a lot of catalysts on the economic side next week. So this really will be a case of what the traders see. And we never know what's going to happen overseas. More news out of Greece could move the market one way or the other. You can see that we're out of the overbought range here on the RSI. MACD's kind of rolling over also. Let's zoom out to the weekly. Try to blow that up a little bit. And we can see what we're talking about here. Again, we're at support even on the weekly also. Uptrend line, 20 moving average support now on the weekly. Maybe we'll come down to the 20. You can see some tests of the 20 being support on the weekly charts. We'll zoom out just a little bit more, and we can see same theory here. Here the 10 moving average has been acting as support on the monthly chart, so it definitely does seem like the market is getting a little tired. a pullback may be on the way, but again, go back to our daily chart. And whichever we want to resolve ourselves out of this triangle, out of this wedge, we want to be prepared to trade that either way. Let's look at our industry leaders, which before gave us a little heads up to the consolidation, to the weakness of the market. And let's see what they're doing this week. So when we start off looking at Apple here on the daily, we can see just this really since February, just a lot of consolidation. Sure, there's big moves in here. I mean, we're talking 360 down to 320. So, I mean, that is $40, but you can see we're really in this big range. Now, we talked about this last week. Here's our shelf. Here's our, and then we basically went below it and have gone even lower. Now we have this gap in here to fill on a daily, and we can see this possibly being as another price level to watch on a daily, and that fills our gap. So that'll be a target to the downside. When we look at the hourly, we can see again really just that consolidation and then the big move down. Let's go down to the hourly. Sorry, there we go. That's what we're looking for. So we can definitely see on Friday the move down. Switching over to Amazon. Amazon had earnings 2 weeks ago and has been doing very nicely. We showed you this wedge last week, and you see we, whoops, scroll over. You can see we basically broke out of that nicely. This is the wedge we had last week, and we've certainly popped out of that nicely. Right now, I'm not ready to go bearish on this one and not ready to go bullish, so I hold off on this one. But so we got Apple strong, Amazon weak. Let's go to Google. Come all the way down to, this is the 500, so it's trying to hold up support at 500, and Google actually has kind of resolved itself to the downside, but we'll see if this 500 will hold up as support. Goldman Sachs, earlier we talked about financials will lead us, and look at that. Look at that weakness right there. That's quite impressive. Let me zoom back out here and see what we're matching up with. So we've got this price level right here. And when we zoom in, we see that's basically where we close. So we're finding support in the gap up here all the way back in September, and we filled the gap with the wick. We filled the gap with the wick. So will this be support? We certainly have some air between the 20 moving average and where we are right now. And again, financials will lead us. So definitely weakness in financials. Also notice we have the death cross. We have the 20 and the 50 crossing below the 200, heck, and the 500. So there's definitely some weakness there. Netflix, still strong with Netflix. Nice uptrend. Be interested to see what's going to happen here as we go and retest this little gap up swing high. So definitely strength on it. I would wait for a pullback to enter, pull back to the 50 moving average. It seems to have held up. Okay, in our education spotlight, we're going to talk about some components or the brew that you should make as you're looking at your trading plan and your trading journal as you review each day. And you need to be remembering and writing down what index, what futures, what currency pair, whatever it may be, what is it that you actually trade, what time of day are you making those trades, why you trade, what was the trading setup. Because again, you want to be able to review and do an analysis and make sure, are there certain times maybe you shouldn't be trading? Are there certain setups that don't work with certain stocks? The only way you're going to know that is by doing an inventory and keeping records of what you've actually done. How you felt about the trade. What were your goals for the trade? Where was your stop? Do you know where your reward was? And what was the end result? How long were you in the trade? And was this a system trade or was this sort of a wing it type trade? These are all things that can, again, put together forms the brew of your trade. And so you need to be able to constantly keep notes, track what you're doing, write down in your journal what you're doing so that you can make better trade decisions and adjust to the current market climate. As you guys know, we're on Facebook, YouTube, and Twitter. There's our usernames, Wilt with Mike, or on Facebook we have a page, Are You Financially Literate? You know about our offers. We've got a great free 5-part video course. We've got everything up to date, so go ahead and if you weren't there before, you can go back and see everything up to date. MichaelGlass.com at freevideo.html. A great trader's mindset. You know, we firmly believe in it's not about the indicator, it's not about the trading system, it's about your mind. So we've got a great package for you with some free rewards for checking us out. And our coaching, you know, where we help you hold your hand and give you one-on-one coaching sessions to develop a personalized trading plan. We still have our great relationship with our broker. We'll give you discounts, 20 free trades, and a great margin for those who are trading futures. And our charting package, which is great on Mac, and for those people like me who need Mac stuff and PC, and it's even on a web browser brace. So, as we said, it doesn't make a difference about your trading system, your indicator, newsletter, or a trading room. If at the end of the day you can't pull the trigger. And coaching, developing a trader's mindset is what will change your trading results at the end of the day. Thanks, guys, and I'll see you next time.